Hello and welcome to Pro Trader Strategies market commentary for Tuesday, June the 30th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environments, and how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I layer on top of it option strategies that I find to implement into my portfolio to increase that overall yield. That's the only way to increase your overall yield, and there's a caveat to that. You need to know what my guidelines are in order to implement any option strategy around any given assumption. Why? Because there's some nuances with every option strategy that has a time and a place to implement those. And I talk about that in detail in the webinars. I kind of brush over it here in the daily market commentaries, but I don't have quite enough time to really delve into the devil of the details there in here. So check out those webinars at protraderstrategies.com. And without further ado, let's get on with that economic data. Well, across the pond, we got a little bit of economic data. We got flash CPI estimates out of the European region, which is Consumer Price Index, coming in at 0.3%, but it was expected to be a negative 0.1%. So it's not a great number, but better than expected there. Stripping out food and energy, we've got the core CPI for European region, flash estimate in line with expectations at 0.8%, expected to be 0.8%. Now, remember, we're stripping out food and energy. We saw the energy spike in crude oil over this, recent time. It's also including alcohol, but I think it's more along the lines driving this number higher is with the core is the energy sector, as we can see here with crude oil moving higher last month by about $10 almost. That would absolutely affect the overall economic data point there. And then we got Chicago PMI. This put a wet blanket on the overall market. Well, we kind of started out pretty bearish in negative territory heading into today, but we got this Chicago PMI number coming in at 36.6. Remember, anything above 50 is expansion, below 50 is contraction. Well, we're expecting, I should say, a 45. Now, there's been a lot of stuff going on in Chicago, especially with the protests and everything else, and that could definitely affect a purchasing manager's forward guidance. So some of that could be a part of that overall picture, because then the market's rebounded quite dramatically on the consumer confidence number that we got out. And that came in at 98.1, expected to be 91.6. Last month's reading was at about 86, so much better than expected there, and a nice trend to the upside as consumers are becoming more confident. I mean, we know we're starting to be able to get out now of lockdown, and that could have added to that overall euphoria. Well, now we're seeing a bit of a flip. Even here in Arizona, we were one of the later ones to close down or lock down, and then we opened up relatively early. Well, guess what? They just did another 30-day lockdown, but it's on bars and gyms. Now, to me, I'm a bit of a contrarian on this. I don't know that the outbreak is basically happening at bars and gyms, even though it is happening with this lower age group that is starting to contract coronavirus. I think it very well could be some of these protests that are going on where these people are literally, thousands and thousands of people milling around. That to me seems like more of a catalyst to create a spreading of this than going to a bar, where these people are at the bars and restaurants and gyms are hyper focused on making sure everything is very clean. So to me, it just seems a little bit wanky that we're pointing it to the bars and restaurants and gyms, where those people are very hyper focused on making sure there's no corona outbreaks there. Whereas when we're in a protest, or not necessarily me, but in a protest, people are protesting. They aren't probably, being the ones to wash their hands after touching and doing all that kind of stuff and mulling around. Is just my idea. I don't know. That could be off my rocker, but to me, that environment probably isn't nearly as sanitary as the one where they're hyper focused on their business. So with that being said, we've got crude oil. Yesterday, we proved that we could test that 40 again and again. It's starting to look like it's getting a little bit more comfortable at that level, but with lockdowns and things of that nature, I think that we're going to see this wane a little bit more going forward. All right, so let's talk about gold. Gold making a breakout move right now up into that 1800 handle. Looks like we might be able to sustain this. I think anyway, we made that top move up to 1804. Now we're starting to see it pull back just a little bit, but now that we're above that 1787 area, it looks like we could start trending a little bit higher. I was expecting us to stay a little bit lower than this, but what's happening here is with these added lockdowns coming back in and businesses starting to shut down again, there might be another stimulus around the corner. And I think that gold futures are preemptively going after that theory, is that, hey, if there is more stimulus, that means more government debt, which means that there's printing of more money, and that gives gold a reason to start moving higher here. Now, I did expect us to break out for a little bit and maybe come back down, but I think that we're starting to see a trend here in gold that's going to start moving higher. I don't have a position in here. I would wait for a pullback myself in gold before entering back in. You know, I caught it on this little rally here with a long call spread in GLD. Now, I've covered that spread for my profit target, so I'm following my guidelines that I set forth in these webinars. Well, now I need a bit of a pullback before I'm going to really jump into that again, at least at this point. You know, things could be changing. Hey, listen, I'm trying to find I've covered a lot of trades in my portfolio. I've done very well over this entire pandemic. I need to start adding some more stuff. We're heading into earnings, so I need to start playing around and allocating more funds right now, but I need something to change. I don't want to see this. I don't want to be chasing this rally at this point. I'm looking for a bit of a pullback. All right, bonds have come off by about a half a point right now, but still in and around that area. We aren't in the 180 handle. I do expect us to hang out in and around this area between 180, 182, 183 area, and on the low end, 177. So we are right in the middle of this area, and I've talked about this for months now, and you can see that it's kind of working out. Yes, we did break down a little bit, which was, you know, a little bit bizarre, but we are back into this little area where I've talked about we're going to spend some time in and around that area because I don't think that we're going to see interest rates rising anytime soon. As a matter of fact, one thing I forgot to mention is Powell is expected to be testifying today. As a matter of fact, he's been testifying already, so that should go on for probably a couple of hours right now. Yeah, so he's testifying. I don't see a time where he's supposed to have ended this this time for testifying in front of the International Finance Committee there. But all right, bonds coming off just a little bit. That could be a reflection of what he said. I haven't seen anything at this point. Not anything major. VIX coming off by a point right now. Why? Because we're talking about the equities coming out of that negative territory. Yes, over yesterday, we did make that nice move to the upside. Overnight inventory, pretty flat if you look at it all the way into the daytime. We could almost say that it was pretty short, or could be short there. But we got, you know, the good economic data across the pond. And then we've got the Chicago PMI coming out, sending us to the lows there, opening up with the consumer confidence coming out at around the open of the markets. And that's been the catalyst to really get us moving higher, despite the fact that we're hearing about some of these lockdowns and the coronavirus spikes going on. So moving on to I think I've got my charts a little bit backwards here. That was a breakdown of the E-mini S&Ps, but NASDAQ up 100 points on the day. You know, this is despite the fact that Actually, I got ahead of myself. I got my charts out of line here. So NASDAQ moving higher. These stay-at-home stocks obviously doing very well and continuing to do very well. E-mini S&Ps up 21, almost 22 points, again on the highs of the day. Dow Jones, what I wanted to talk about. Dow Jones Industrial Average right now, the index is up over 300 points. The futures, which are forward-looking, they're trailing that index, which means, down the road, people are fearful of the downside is usually how you're going to look at that. If you look at the futures and you look at the index is right now. The futures are trying to tell us what is happening here in the future, where we expect to be going. And obviously, that is slightly lower than where the index is. The index is up over 300 points, and that's with Boeing being a big drag on the Dow Jones right now. Let's talk about a couple other things. Tesla making a big move today. That's driving NASDAQ up 70-some points. And interesting enough, this J.D. Powers just last week came out and pretty scathing review of the Tesla, and marking it as like 31 of the auto brands included in the study. It was like one of the the lower ones. I mean, it was in 31st place, and that was based on the quality review. 250 problems per 100 vehicles. I mean, that's pretty bad. Whereas the top vehicles only had about 130 problems per 100 vehicles. Dodge being one of the better ones, and Kia being another one of those top brands. Just as a note, who's doing good? Usually Dodge isn't necessarily one of those ones you think of as a quality car necessarily, but it was one of the top ones, and Tesla one of the bottom ones. But Tesla hasn't really fared badly from that. As a matter of fact, I think I saw something where it is looking at $200 billion valuation at this point. And then Boeing coming off today after yesterday. The big news is that they were going to start testing this 737 MAX and trying to get that back online. Well, that made us move really high, or start making a big move higher, I should say, in Boeing, as people were starting to feel like, okay, maybe this full year of just terrible news for Boeing. I mean, it's just been hit after hit after hit. It's over 400 days where the 737 MAX has been grounded, and then we saw all of these order cancellations happening. Well, today, down 10 points on Norwegian Air, canceling almost 100 Boeing 737 MAXs and a few Dreamliners. So that causing another drop off in Boeing today. So not great news out there for Boeing or the airline industry, with the overall travel and leisure area being shut down. People probably aren't going to be traveling. Water parks here also getting closed down. We've talked about Disneyland not reopening. So a lot of those things are definitely headwinds for the travel and leisure moving forward, and that might be the place to start adding some negative deltas to a portfolio. I haven't found anything yet. It looks like they've kind of already had a big sell-off, may have missed that, but I'm still looking for opportunities out there. Having said that, I haven't done anything to my portfolio. I'm kind of sitting on my hands. I've talked about this week being a holiday week and volume starting to shut down a little bit. I'm going to pick my spots here very diligently, going at least throughout this week. So I don't know if there's going to be a whole lot of trade happening going on, rather than more wait and see and looking for those opportunities. Well, without further ado, here is the disclaimer. Please take a moment to go over it. Yes, we are an educational company. I am not trying to solicit you guys to buy or sell any of these underlyings in my portfolio. What I want to do is educate you guys on trading options, all right, and how we implement those into our portfolio. Check out yesterday's. It was a clinic on how to trade options, and where I was taking off some winners there, despite the fact that I was directionally wrong. So check that one out. As for today, my portfolio is doing well, especially with this rebound. So I'm going to kind of sit on my hands and keep an eye out on it. All right. So that's all I got for you, other than if you can't take that, take it easy.